You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Hello traders, this is your Options News Rundown for Monday, August 13th. Our first story today is from CNBC. European stocks were feeling the heat on Monday afternoon as Turkey's worsening economic crisis prompted investors to offload riskier equities and flee to safe haven assets. The Pan-European Stocks 600 was a touch lower during mid-afternoon deals, with sectors pointing in different directions. Major bourses were mixed, with the French CAC 40 trading higher, yet most peripheral indexes were in the red. Healthcare stocks were also seeing a lot of red earlier today, with the sector being one of the biggest losers following a Roundup cancer ruling. On Friday, a U.S. court ruled that the weed killer Roundup has caused cancer in a groundskeeper and awarded him $298 million in damages. The market focus is largely attuned to Turkey's financial woes, with the country's currency taking another slide to all-time lows of 7.24 on Monday morning. The lira briefly recovered some of its recent losses over the weekend after Ankara's finance minister said the country had drafted an action plan to ease investor concerns, and the banking watchdog announced it had limited swap transactions. However, the lira tumbled again amid broader investor concerns over Turkish president's increasing control over the economy and the country's worsening relationship with the U.S. The lira has since pared some of its losses to trade around 6.866 against the dollar at 3:20 p.m. London time. Next up, we have a story from Bloomberg. Elon Musk said interest from Saudi Arabia's sovereign wealth fund gave him the confidence to drop the bombshell last week that he was considering taking Tesla Inc. private. The Saudi Kingdom's public investment fund approached Musk almost 2 years ago about taking Tesla off the market, he wrote in a blog post on Monday. He confirmed the fund has recently bought as much, almost 5% stake, and is interested in helping take Tesla private, according to Bloomberg News, which reported that on Sunday. Musk described a July 31st meeting in which managing directors for the Saudi fund expressed regret that the transaction hadn't moved forward. Several investors have since sued Musk and Tesla, claiming the company's share price had been manipulated. The Securities and Exchange Commission is said to be intensifying its scrutiny of the company and its chief executive officer after having started gathering general information about Tesla and Musk's earlier pronouncements about manufacturing goals and sales targets. One of Tesla's biggest critics, Vertical Group analyst Gordon Johnson, read Musk's blog post as a walkback maneuver from his, quote, funding secured tweet last week. He cited Musk's statement on Monday that the Saudi fund's support for taking Tesla private was, quote, subject to financial and other due diligence and their internal review process for obtaining approvals. Our last story today is from Reuters. Earlier this morning, OPEC forecast lower demands for its crude next year as rivals pump more, and said top oil exporter Saudi Arabia was eager to avoid a return of oversupply. In the monthly report, the OPEC countries said that the world would need 32.05 million barrels a day of crude from its 15 members in 2019. That's down from 130,000 barrels per month, or barrels per day from last month's forecast. The drop in the demand for OPEC crude means that there will be less strain on producers, making up for less supply losses in Venezuela and Libya, and potentially in Iran as renewed U.S. sanctions kick in. Crude edged lower after the OPEC report was released, trading below $73 a barrel. Prices have slipped since topping $80 this year for the first time since 2014, on expectations of more supply after OPEC agreed to relax a supply-cutting deal and economic worries. The OPEC report said concern about global trade tensions had weighed on crude prices in July, although it expected support for the markets from refined products. And that's all we have for today. You can find all of these stories and more on theoptionsinsider.com, and Dan will be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.